Eric Mwaded.com with another mentorship video. Now I just got your email asking about NVAX on the daily, and you had posted a daily chart, and just to draw the line you had mentioned it was somewhere around here, around 54, and the question was, this is where the stock seems to be showing resistance once in a while when it's dropping, and sometimes even when it's breaking out. For example, here it moves higher. So that was your question. What would happen if the stock was to come back above this line around 54, so 50, or let's call it mid 50s? Well, of course, if the stock can climb above that, it might have a chance of doing well. And you also asked the question, is this a good way to look at the chart? I think not. And I'll tell you why. Because of the data. You're looking at 3 years, which is okay. I mean, there's really no wrong way of looking at a chart, but 3 years daily is a lot of data. Now, unless you're looking for maybe highs and something of that kind, maybe you can use this type of a long view on the daily. Now, even if you look at this current situation here, there's a lot of data. A lot of data in the price also. This is a lot of data for 3 years. Lots of closing prices, because the charts are formed based on the daily closes on a daily chart, of course. I think this is too much information, and I'll show you why. If we go to the traditional 1 year daily, take a look at how clean this looks. There's less information. You can narrow down to some information or viewpoint. For example, we can see that we recently broke. Now this is more relevant in the here and now. We broke there. Very simple. This was the established line, and we broke here. Ever since then we've been down. In fact, if you look, we've tested the line before. Over the last couple of weeks, we came here, we tested the line, which was this high, and we pulled lower. We can see as we come into the conclusion of the week, we are coming to the underside of this line here. Clearly, we need to hold above that if this market or if this stock is to start trading higher. So all that you can glean from the 1 year daily. You don't have to go too far away to see that in the here and now, this is the battlefield right here around the 50, where if you take that line again, is where it needs to be trading above this line if it's gonna do well. So that would be my point of view for now. And in fact, if you go back recently, you can see that there was some type of a higher high on this 1 year daily chart. You don't have to go very far. Higher high in price, lower low on the technicals, and that set up a situation where the stock eventually did drop. The technicals did show that negative divergence. There was another short-term break of this trend. There was a nice trend line being formed by this low, and this recent support low. Once we broke through that again on this 1 year daily, we got the plunge. So there's a lot of information that we can immediately get from this 1 year daily. We don't have to go too far away to get a big picture, or at least a 1 year daily. Now, I want to show you something that I just realized now. If we see this breakout here, because the key, and this is probably what I need to emphasize, the key for a stock is always try and figure out where a movement began. Maybe it's a movement to the upside, or it's a movement to the downside. In this particular example, we see that there was a breakout somewhere here. Now, we are using hindsight, and this comes into play because I can see that there was a breakout here. If I take the highs and draw a line connecting the previous highs, so let's just draw a line like that, and this is probably not the best example, but I think I'll run with it. We broke out above this line successfully here. There was a breakout there. In fact, you know what, let me draw this correctly. So what we're trying to use is trying to find the stock. The stock broke out here. We know that was a nice momentum for the stock, just like we know that, and I'll come back, this was a nice entry during these lows on hindsight. But I'll come to that in a second. For now, let's take a look at this breakout, because this is where we see that the stock steps up the momentum and goes on to a nice run from about $6 to close to $10, or about $9.80, $9.70 here. So nice momentum in a couple of weeks. So we can see that there was a breakout above this line here, and I draw it there because you can see it connects this high, close to this high, through this high, and then finally the breakout was here. And this breakout coincides with not this breakout. Actually, it gives us this entry point here. That's okay. So there was another breakout after about 2-3 days of rest. So there's an entry point there. I hope I'm not confusing you, because now I've taken the question and gone. But what I'm trying to say is that there's a lot of information on the 1 year daily. You don't have to go far away. It's right in front of you. Now, if I take this line, which was the previous breakout, extend it, I see that immediately there was support on the line here, which was this nice entry. And that nice entry took the stock higher. So that line extension is valid. It gave us the breakout, which is here, which was this breakout. Now we are extending the line, and I'm going to extend it all the way. And what you see is that a lot of information. Number one, we have double bottom support on the line here, right? You see that? Double bottom support with uniform activity, which looks something like this. It goes below, above, or back to the line, slightly below and above. It looks like a double bottom. And both of these instances are uniform action. This is uniform action. That is uniform action. And I'm talking about this period here. So once you see that uniform action weaving itself below the line, back above it, the movement back above the line, and let me change colors here, this entry here is a buy signal, which is this entry here, which happens to be this nice entry here for a little move to the upside. In other words, this happened to be support reaction, which was this point, and you can see that this is somewhere here. Now we can see that since then we've come here and we broke below the line. There was no uniform action. Again, because there is no uniform action support on a well-established line, that was a sell signal here. All this to say that the 1 year daily honestly was giving you and is giving you all the information you need for the here and now. I hope that makes sense. We don't have to go back to 2 years ago or 3 years ago. We can if we want to. There's nothing wrong with that. But all the information most of the time is going to be on our 1 year daily. Now, I was going to say that if we had seen uniform activity, around here, then that would have been time to buy again. But we did not see any uniform activity. In fact, what we see here is that the stock broke below that, and as a confirmation that that analysis is correct, that this line was critical, we see that there was a plunge here. It so happens that that line also coincides very nicely with the previous line we drew here, this lows line. So both of them coming to the same point. It's interesting how that plays out. As you can see, both lines intersect here. Once you drop below that, the prices have dropped since then. One thing before I leave this chart, and it's something we've been watching, and the reason why the stock was looking like it was going to bounce a couple of weeks ago is because we know that this was a nice low on hindsight, and the stock had a nice run. We can see that this RSI movement began here. Nice point of reference here, which is this lows. If you bought here, you had a nice opportunity to make a lot of money in a short period of time. So if we take that line, this information, and draw a straight line, we can see that we had two instances of uniform activity below the line and back above it, which gave you the recent lows. And then we come and touch the line again with uniform activity at the line and back above it, which is this lows. So we can see that the stock is fighting between two major points. Point number one, it is that the fact that it is showing us nice uniform activity here. Let me draw that correctly. It is showing us nice uniform activity. Oh man. Alright, let me try this again. Uniform activity there and there for nice lows here and here. So on the bottom side, there's good support. Yet short term, the problem is, and what we can watch, is that it is now back to this back test we talked about at the beginning of the video. So there's a lot of information is my point on this chart. A lot of information. You don't have to go too far. Just stay home and the information is right in front of you. So you can see the challenge here, since you're already on the stock, is that the stock should move above this blue line above where it's been showing recent resistance. If it does that, then it's on good repair mode. Now, instead of going to 3 years worth of data, so this is the 3 years worth of data that you had been looking at, which looks very convoluted. Why not go to the 2-year weekly? Now you get a cleaner looking chart. And as we had been discussing, this one just needs to hold. You can see that there's a breakout, let's call it somewhere here, connecting the previous highs. You can draw it like that. And this breakout was this nice entry here for this price movement. And if we draw a simple line from there, you don't even have to do a lot of work. You can see that we've found uniform activity support here. There's no argument there for these lows. And after that, the stock did shoot up in price. And now we are here. All we need is the stock to continue doing exactly what it's doing, because at this rate, if it can continue just doing what it's doing, it looks like we are gonna eventually move above that line with uniform activity. It's gonna eventually look like that. And if it can give you uniform activity bounce on that line, this indicates that this is a nice support zone looking to go higher over the next couple of weeks, next couple of months. So the information is right here and it's in front of us, and it's the same thing we've been looking at. Sometimes maybe we look for too much. There's a breakout here, extend it. All you need is uniform activity for the stock to trade above that line, and that is going to show you support. That's one view. The other view is pretty interesting. If you take the highs and take this RSI high, draw a straight line connecting the this high here like that, extend that line, just extend it. Simple analysis but very powerful. You get a couple of interesting data points. We broke out here, which is this movement in price, which was nice entry. The stock had a nice run after that. We come here on the line on a back test, successfully holding, which is this support, and the stock takes off higher. And now over the last couple of weeks, we've come here. You didn't do this, I didn't do this. The market is doing this on its own, indicating that this should be nice support. And as long as the stock is bouncing back above this blue line and pointing upwards, you have to assume, without knowing the future, that the probability and the potential is for the stock to continue moving higher. Obviously, there's always qualification, and that is if the stock breaks below that red line, that blue line, that's a problem. If it breaks below that support line, then it becomes a problem. For now, it's not. Instead of looking at the 3-year daily chart, which is this one, why not look at the 3-year monthly chart? And what do you see on the 3-year monthly chart? One of the greatest observations is that right now we are back above 69.1. And as long as this stock can stay above 69.1, then there is no reason to panic. In fact, it looks like to me that over time, if it can break out above this current monthly closing high, and that closing high from about 2 months ago is at 915. In fact, now I'm looking at this one as a potential breakout candidate because the monthly is holding up very well, very impressive. In fact, not only is the monthly, we are looking at the MACDs on this 3 years monthly chart. The MACDs are pointing and trading at 3-year highs, and the other MACD is already trading at 3-year highs. So the momentum, the potential here is with a good market, all this instrument needs to do now on this monthly chart, which takes away all the noise from the hourly, all the noise from the minute charts, all the noise from the weekly charts, and gives you a nice smooth action, is that now if this can continue holding above 69.1, and if it can break out above 9.15, you are looking at a fresh potential breakout. So the key here is for anybody who wants to buy this or anybody who is looking to hold, is that now you want to see the stock break out above 9.15, which is the current monthly closing high. We've already had 1 month of rest, which is sometimes needed, and it's a minimum requirement, just like there was a 1 month of rest here and a breakout. And you can see this is a good example because this breakout also pushed the RSI back for the first time above 69.10 at this instant here. So what you're looking for is something similar, because here there was a nice run for a couple of weeks, couple of months. If you can get that breakout above 915 and the RSI continues holding above 69.1, boy, that's exactly why you are holding. Eric Mwade, good luck, peace, and blessings. Mwah! I am out. Have a great weekend. Woo!